Ready for a deep dive. One that's a little different.
Different, how so?
Well, we're trading in the boardroom for the ballroom.
Oh, intriguing.
We're unpacking the story of Nicolas Darvas. He went from, get this, tangoing across the globe to turning $3,000
$3,000
into $2 million in the stock market.
That's a story.
All during the 1950s.
The 50s. Wow. So no algorithms or high-frequency trading then. This should be fascinating.
Nope. Imagine you're on stage one night, wowing the crowd with a tango, and the next, you're poring over stock charts. That was Darvas's life.
What a life.
But before we get to the telegram trading, we need to rewind. Back to his early days, to understand why his initial success was actually a recipe for disaster.
Ugh, a recipe for disaster. Beginner's luck sort of thing.
Exactly. Before Wall Street, Darvas was offered stock in a Canadian mining company, Brilland, as payment for a dancing gig.
A dancing gig?
Yeah. He wasn't even able to do the show in the end, but he bought the stock anyway. 6,000 shares, 50 cents each.
So $3,000. Not an insignificant sum, but...
Exactly. But here's the kicker. Within 2 months, that 50-cent stock shot up to $1.90.
No way. What did he do?
Darvas, being no fool, sold everything immediately, pocketing an $8,000 profit.
Talk about beginner's luck.
Right. But here's the thing.
Let me guess. He went all in.
He got bitten by the stock bug. Hard. Dove headfirst into the Canadian market.
Oh, no. This is where it gets dangerous.
And started taking stock tips from anyone who'd offer them, nightclub patrons, stagehands, you name it.
Yeah.
Have you ever been in a situation like that, where everyone suddenly seems to have the inside scoop?
Oh, all the time. It's a common trap, especially for new investors. You're bombarded with information, everyone claiming to have the next hot stock.
Right. Remember those companies Darvas mentions? Mogul Mines, Consolidated Sudbury Basin Mines. Those names ring a bell.
Can't say they do.
Yeah. Definitely not the Apples and Amazons of the 1950s.
Exactly. And that's my point. Darvas fell for it all. Rumors, not understanding commissions, but most importantly, being completely overwhelmed. Information overload.
That feeling of information overload is something I think we can all relate to.
Oh, absolutely. Even today, you open a financial news website and it's like a fire hose to the face.
It's easy to get swept away by the current without a plan.
And that's the crucial takeaway from Darvas's early blunders. He was mistaking information for insight. It's like collecting ingredients without a recipe. You might have all the parts, but you won't end up with a cake.
So true.
This struggle to make sense of the deluge of data, well, it's what forced Darvas to develop a system, a way to cut through the noise and focus on what truly mattered. Price action.
Price action.
And that, my friend, is where his box theory comes into play.
So Darvas takes his hard-won lessons and sets his sights on the big leagues, the New York Stock Exchange.
The NYSE. Makes sense.
You'd think moving to the NYSE would be the answer, but...
Yeah. Well.
Old habits die hard.
Ah, I see. So the rumors followed him.
Oh, absolutely. One of the wildest. Involved a company called Baldwin Lima Hamilton, a railroad equipment manufacturer.
Okay, I've heard of them. What was the rumor?
They were building an atomic train.
An atomic train? Come on.
I know. Sounds crazy now, but this is the 1950s, the atomic age. People were willing to believe anything was possible.
True.
The hype was real. The stock took off like a rocket. And Darvas, well, he bought in late.
Ouch. I can guess what happened next.
No atomic train, just losses, over $1,000 worth.
That's gotta sting.
It gets worse. There was another one, Sterling Precision.
What, another atomic-powered company?
No. This time his broker swore it was going to skyrocket.
Oh, boy. Those brokers and their promises. What happened?
Darvas bought 1,000 shares. The stock tanked. Another painful loss.
So 2 steps back after 1 step forward.
Yeah. But these losses, as tough as they were, forced a turning point.
That's so long.
They forced him to confront the flaws in his approach. He started analyzing his trades, both the wins and the losses.
Always important to review both the wins and losses.
Looking for patterns, trying to understand what actually worked.
And what did he find?
This is where he has his breakthrough. The box theory is born.
The box theory sounds ominous.
Now, before you think this is getting too technical, it's actually quite simple.
Yeah.
And ingenious.
Okay, I'm intrigued. Break it down for me.
It's not about complicated financial analysis or poring over company reports.
So what is it about?
Darvas's box theory. It's all about price action.
Price action. Okay, go on.
Imagine you're watching a stock, and it's been bouncing between, say, $20 and $25 for a few weeks now.
All right, I'm with you.
Like it's trapped in a box, Then, bam, it breaks through that $25 ceiling on high volume.
That's the signal. That's what he's looking for.
Exactly. He'd draw these boxes on his charts, tracking how the stock price moved within them.
Well, the boxes helped him visualize the price action. Interesting.
Breaks above or below these boxes signaled potential buying or selling opportunities.
So it's all about identifying those moments of upward or downward momentum.
Exactly. He shifted his focus from all those confusing company details to the pure language of price movement.
Fascinating. He's trading on a whole other level.
And here's the real kicker. This shift, this whole box theory, it happened while Darvas was on a 2-year dance tour around the world.
Wait, hold on. He's developing this whole system while literally tangoing across the globe.
Oh, yeah. He was placing all his trades via telegram.
You're kidding? No internet, no Bloomberg terminals, just telegrams.
Just him, his telegrams, and his trusty charts. Talk about a contrarian approach.
That's incredible. But wait, wouldn't that be a disadvantage? No instant access to information?
You'd think so, right. But in a way, that distance from Wall Street, from that constant flow of information and rumors, it actually worked in his favor.
How so?
It forced him to be disciplined. He was getting those price quotes, but he was shielded from the daily noise.
I see. The emotional roller coaster of the market.
Exactly. That's something most investors struggle with, even today.
Big time. It's so easy to get caught up in the excitement, the fear, the greed. It can completely cloud your judgment.
Right. But Darvas, without even realizing it, he'd stumbled upon a way to minimize those emotional influences.
Forced to think long term, not get shaken by every little blip on the radar.
He was forced to be methodical, to focus on his system, not on every little market fluctuation or whisper in the wind.
And this is where it gets even more interesting, because this is where another key piece of his strategy comes into play. Stop-loss orders.
Stop-loss orders. Now, those are something I know a little about.
Most experienced investors do. But for anyone just starting out, maybe you could,
Give us a quick rundown.
Sure.
Stop-loss orders are like a safety net. You set a price, and if your stock starts going down, it sells automatically, limits your losses.
Exactly. Takes the emotion out of it. We've all been there, right? Holding onto a stop, hoping, praying it'll bounce back.
Oh, I've been there. But for Darvas, stop losses weren't just about damage control. They were crucial to his whole system.
How so?
If a stock hit his stop-loss price, he was out. No hesitation, no second guessing. Forced him to make decisions based solely on, you guessed it, price action.
No fear, no hope, just cold, hard price action.
Exactly. It's remarkable, isn't it? He took emotion out of the equation, and it worked. Using his box theory, sticking to his stop-loss rules, Darvas started seeing some serious returns. We're talking turning tens of thousands of dollars into hundreds of thousands.
All through telegrams. Don't forget that part.
Right, all through telegrams. It really shows you the power of a disciplined system, even in a world as unpredictable as the stock market. But, even with this incredible success, Darvas' story isn't all sunshine and roses.
Let me guess. He got cocky. Started thinking he was invincible.
Yeah. Let's just say, coming back to New York, flush with cash, riding high on his success, it was a recipe for disaster.
Ah, yes. The siren song of Wall Street. It's hard to resist.
He was back in the thick of it, bombarded by opinions, tips, information overload, and it threw him off his game. Big time.
It's easy to see how it happens. The energy, the excitement. Everyone's an expert.
He started making impulsive decisions, chasing the latest hot tips, abandoning the very system that had made him successful.
Oh no, it's like he forgot everything.
It's like all that noise just drowned out his own internal compass. But here's the thing.
What's that?
Darvas. He recognized his mistake.
He did. Well, that's something. Not many people do that.
Oh, he knew. He realized being in that environment, for him, toxic. So what does he do?
Let me guess. He moved to a desert island. Became a goat herder.
Pretty much. He doubled down on the telegram-only approach, physically removed himself from the temptation of Wall Street, recommitted to his system.
Good for him. So, did it work?
Like a charm. He rebuilt his fortune, eventually trading with millions of dollars.
Millions. Wow. Talk about comeback story.
He stuck to his guns, price action, stop losses, trusting his system above all else. It's really a testament to self-awareness. He recognized his weakness.
Right.
And turned it into his strength.
And in the end, he hit his goal. $2 million.
Yeah.
Not bad for a dancer who started with $3,000 in a telegram machine.
$2 million. But more importantly, he learned something that, I think we can all learn from.
Oh, what's that?
True success. It's not about the money. Not really. It's about mastering the mental game, understanding your own biases, and developing a strategy that actually works for you.
So true. It's as much about psychology as it is about picking the right stocks.
Exactly. Darvas's journey is a reminder that we all have the potential to achieve our financial goals, but it takes discipline, self-awareness, a willingness to learn from our mistakes.
And maybe, just maybe, the courage to disconnect from the noise of the world around us.
It really makes you wonder, doesn't it?
Makes you wonder what?
In today's world, where we're bombarded with information 24/7, could Darvas's telegram-only approach be the key? The ultimate form of focus and discipline? Something to think about, right?
Definitely gives us all something to chew on.